Good afternoon, ladies and gentlemen. My name is Edmund So. I'm representing IG Markets. I'm the market strategist. I see a lot of familiar faces. Some of you are my previous students. Today, I would like to share with you on the market outlook for indices, shares, and Forex. Thank you for your precious time for joining us. By the way, IG Markets, we offer a wide range of products from indices, Forex, and shares and Forex CFDs. And IG is the largest CFD player in the world, not just in Singapore, but in the world. Today, I will not be selling anything, so I'll just share my market knowledge with you. But as usual, my disclaimer, whatever I say is personal opinion only, not investment advice. Today, I will give you a summary of the key themes or key investment themes that you may want to look out for over the next few weeks or next few months, and also what are the key risks to watch out for. I think the summary will be useful for some of you who are bogged down by daily headlines or all the noises from the market. But in my view, the current market rally is driven by the abundance of liquidity in the market. As you know, US has embarked on large scale of quantitative easing for quite long, and Japan has recently also embarked on quantitative easing. So there's plenty of money, plenty of liquidity flooding the market. And it's because of this rally, you can see US market, Japan market, they are recording new high every single day. Today, I will look at US, Europe, Japan, China, and Singapore. So some of this information may be useful for you to take note. Take a look on the US first. Personally, I have seen a lot of indicators and signs that US is on the path of recovery. You can take a look on the housing data, the manufacturing data, and the job data out of US. It seems that US is on the recovery mode. In fact, President Obama has mentioned repeatedly a few areas that he wants to concentrate to gain the competitive advantage for US. Namely, the area that he wants to look at will be how to improve on the competitiveness via cheap energy in US, improve on their manufacturing competitive advantage. For example, Apple has also started to bring back their job back to US. And Ben Bernanke has pledged to keep the QE in place until the job data improve. It's like writing a guarantee that they will continue to print until the job data improve. And more importantly, even the housing sector, which has been in slump for years, are showing signs of recovery. And by the way, housing used to contribute quite a big part of the GDP. And this improvement in the housing will in turn improve on the construction activities, which actually will also increase the number of jobs available in the markets. All this together with earnings that have been reported over the last few sessions, you can see that US are on track on a recovery mode. That's why you can see Dow Jones and S&P are making new high over the last few sessions. However, on the Europe side, things are not as pretty. My personal view is that US will continue to outperform Europe in the near term or even in the medium term. The reason is that Europe, although it's more stable compared to last year, there's still no growth. There's still no growth. And once in a while, you still got some surprises that coming. For example, the Cyprus fiasco recently. So in terms of relative performance, I believe US still outperform Europe. And recently, we also take a look on the Japan. Since the President Abe Shinzo come into place, together with the new BOJ official, they embarked on a large-scale quantitative easing that has not happened for the last many years or decades in Japan, which caused a surge in the Nikkei 225. And personally, I believe this quantitative easing will also produce a lot of money in the market, and some of this market will benefit, including Singapore. And for Japan, the exporter itself will actually benefit directly because of the weakening yen, which will spur the increase of their export in Japan. Likewise, those of you who are trading Japanese market or even in the automotive market, you can take a look on those car-rated counters for Japan. And in China, what I see is that there's a downtrend in the Shanghai Composite Index. Later, we'll take a look on the charts, okay? So I will first cover all these key themes, key risks. Later, then we'll take a look on the technical analysis on the charting. Personally, when I analyze, I will use both fundamental and technical charts because fundamental will decide the long-term direction, but technical is for short-term entry and exit. For China, there was a strong rebound in the early part of the year because a lot of people are speculating that the new leadership in China, led by Xi Jinping, will loosen the monetary policy and ease the property cooling measure. But instead, the new administration in China tightened the property market. That's why you can see a lot of our China property counter. Initially, there was a strong rally, and then now there was a downtrend. Okay, you can take a look on Yen Lot, for example, in Singapore, and even CapitaLand, which is a proxy to China market in Singapore. Later, we'll go into those counter, okay? But basically, take note, in my view, China at the moment is quite near the bottom, but it may still go down a little bit more based on the charts. Because China, the economy, is predominantly driven by old models at the moment, still driven by the old models. Basically, it's the China property market, fixed asset investment, and the exports. So Xi Jinping administration will have the mission to try to move this model into a consumption-led model, which will be more sustainable in the future. So short term, I see there's a downside risk in China further, but it's near the bottom though, and I still believe the China story is still intact, so long as there's no political risk. And for ASEAN, for Singapore, I think Singapore will experience our influx of funds from all over the world, even from Europe. Even the Europeans are not confident with their own banking system, especially after the Cyprus fiasco. Okay, so a lot of money actually is flowing from Europe, US, and ASEAN into Singapore. That's why you can see STI is very resilient. It has tried several times to clear the resistance at 3320. So far, it has not cleared convincingly. We have to watch carefully. Later, I will look at the charts to analyze. But basically, in Singapore, Southeast Asia, the ASEAN countries are performing very well, especially Philippines, Indonesia, Thailand. Malaysia is going through an election shortly, so we will not mention about that one. But Singapore will continue to enjoy the safe haven status. A lot of money is flowing into Singapore because of the safe haven status. And a lot of other ASEAN countries are actually eyeing at Singapore companies, good Singapore companies. As you can see, Maybank bought over Kim Eng, and you can see F&N is also being bought. So we have a lot of attractiveness as compared to a lot of companies in the Asia, in the ASEAN countries. However, my personal view, this is only my personal view. I'm not issuing any buy call or sell call, okay? Need to be more careful in the near term. Shanghai Index and Hang Seng Index are already in the downtrend and near the support. There's a risk, the support, I'm not sure whether it will hold. And the Dow Jones S&P in US and the Japan Nikkei 225 are at record high. But if you look at their technical indicators, they are showing some divergence. So this type of chart pattern is quite prone to short-term pullback. We need to be very careful in the next few weeks. This is the near term. In the second half of the year, when US recover, it's a double-edged sword. It may mean good for US economy, but it may also mean the end of quantitative easing towards the end of 2013, because when job data continue to improve, it will come to one point that US will scale down their printing of the money. They have scaled down the quantitative easing. And before they really do it, they'll give out some hints, and market may trigger the sell-off. And for Europe side, it's not out of the wood yet. After the Cyprus fiasco, who's the next? Okay, Cyprus is very small in terms of GDP to the Eurozone, so I'm not especially concerned about that one, although it set some precedents that is not so forthcoming. I'm more worried about the political situation in Italy and the German election in October 2013. These are the major potential event risks that you may want to watch out for, okay? These are more the fundamental side. I'll take a look on the charting side, okay? This is the Dow Jones charts. How many of you are already into technical analysis? So that when I say this, I can use a simpler jargon. How many of you are already familiar with technical analysis? Less than half, cannot be. One more time. How many of you are already familiar with technical analysis? Well, really, only 1/3. Okay, then I will use a simple language, okay? Basically, I'll look at the world leader, which is the US market first. You can see Dow Jones. These are moving average. The two moving averages are indicating a strong uptrend. MACD is cutting up. It's breaking the resistance as well. However, if you look at the RSI, there's some type of divergence going on. Okay, you can go back and take a look. I will have another session for those of you who are interested if you want to know more about the technical indicators. But basically, short term, the uptrend is intact. Here is okay, but there are some divergence going on. So this type of a pattern potentially means that when we are at risk, when we're near the 15,000, okay? Now it's 14,800 already. We are quite near to this 15,000 magic number, which when there's a 000, usually market tend to sell off. We need to be very careful from now onwards here, US, because when US tank, Singapore, we cannot be spared off. Huh? When US tank, okay? And the support is quite far away. The support is at about 14,382. I repeat, the support, in my view, is around 14,382. It means that if it drops, it could be quite far away, which is 500 points away. Okay? So we need to be very careful, and that's only the first support, you know. The next support will be another 200 points away, which is 14,100. So I'm not looking at that one. I'm looking at the near-term support, which is about 14,382. So we need to be very careful on the US side. Likewise, S&P, the support now is about 1540. Those of you who are not familiar with support and resistance, you can attend my free technical analysis courses in IG Market. If you register with us, we have a basic technical analysis course for free for the new clients. I will tell you more about it later. Likewise, S&P is also breaking new high. Japan, likewise, is also making. You can see Japan market, the pattern, and the US market pattern is very similar. These two are leading the world in terms of their stock market performance. They're breaking new high, and US is breaking new high for years. No, these are the new high for years, okay? However, again, there's a divergence going on. In comparison, Hong Kong, Hang Seng, maybe I should look at the Shanghai first. Huh? The big brother actually is China, not Hong Kong, okay? When China tank, Hong Kong will tank. So we look at the Shanghai index first. Shanghai, you can see the moving average already cut down. You can see the cross. Okay, this is a bearish signal. When the blue line cut down the red line, it signals a sell down. You can see there was a sell down here. Can you see? Likewise, MACD, when there's a cut down here, there's a sell down here. So all these are basic indicators that I will share with you when you come to my seminars for free in IG Market. But basically, Shanghai at the moment is testing a support at about this number 2200, 2200. So again, watch out for this number very carefully. It is supporting the last sell down a few days ago. You can see there was a sell down here, but it closed above it. So this is the last line of defense. If this line fails, the next level could be about 2160. Okay? That's the reason. Later I will show the charts. Even in Singapore stock market, STI is doing very well, blah, blah, blah. But you will see that the REITs are doing very well, the banks are doing very well, but the China counters are showing a divergence. Right? China counters are coming down. Later I will show you some charts. You take a look on China Minzhong, you take a look on the Costco, you take a look on Yangzijiang, you know what I mean. A lot of China counters are coming down because their exposure is in China. And you will see a similar pattern in Hong Kong Hang Seng, because Hang Seng is following quite substantially to China, because after all, China is the bigger brother. Hong Kong Hang Seng, you can see the indices here already cut down quite a long time ago, and the support was broken once. The next support was broken the other day at 22,000. Okay, there's a risk that if this thing cannot hold, we could drop probably 800 points away. The support is quite far. It's 21,150. I repeat, if Hang Seng, this support cannot hold, the downside risk is pretty high. It's a few hundred points away, about 21,150. It's quite far. So we have to watch out very carefully, because after all, those of you who trade intraday, when Hang Seng tank, when Hang Seng drop, we cannot be spared off. We cannot be no problem. Huh? We will tank also. Huh? How many of you here are intraday or short-term traders? Be honest so that I can share more. If there are very few, then I won't share more. How many of you are short-term traders or intraday traders? Yeah, there are some, okay? Those of you who know trade intraday, you'll know Singapore, we tend to watch Hang Seng quite a fair bit. Then afternoon, we'll look at the Dow Jones futures. Am I right? So when you trade stock actively, intraday or short-term wise, indices is quite an important thing for you to watch out for. The fundamental will not change overnight for many counters, but if the indices change, your price will change. Am I right? Yeah. So this is Hang Seng. For STI, we are much more resilient as compared to Hang Seng and China. You can see we are trying to clear this number. Watch out carefully. It's around 3320, 33,320. It has to clear this convincingly before it can move upward, okay? I mean clear convincingly with expanded volume. It has to come with the volume to be reliable. And I see the downside risk, it could be about 3235 in the short term, because there was a low here. This is a support for the STI in the short term. Singapore PE ratio is not very cheap at the moment. I would say it's at the average, the PE variation here. We are not in a very cheap market. So we've got to be very careful and selective in terms of choosing the shares that you want to trade or invest. At the moment, you can see a lot of counters are doing quite well. Example, a lot of my clients are trading property stocks. For example, a lot of my clients bought Singapore land at about $750. Now it's $9. UOL bought at $525. Now it's $7. The reason they bought into the property counters is because of the huge discount to the net asset value. So this discount tend to narrow eventually. So you can see that a lot of my clients, a lot of people, they need to be very careful and selective in choosing their counters. Most of my clients are into good property counters and good bank counter, like for example OCBC, staged a very strong uptrend. You can see this channel. Okay, this is a channel. It moved along this direction, and MACD is cutting up. Moving average is doing very well. And the company is doing a lot of share buyback. So a lot of my clients actually bought into this for some time. And it listed in Singapore also, Costco, but it's showing the other direction. It's in a downtrend, you can see. That's why I want to highlight the divergence in terms of the different counters. Depends which sector, which country they're exposed to. For example, this is exposed to China. If China STI, China index come down, this will have to follow. You can take a look on Yang Zijiang as well. You can take a look on China Minzhong, for example. A lot are showing this pattern. Okay. Now we come to Forex. By the way, before I finish the shares, IG offer a very competitive commission rates in terms of share trading, CFD share trading, at 0.1%. Take note, the commission rate for Singapore shares in IG, CFD, is 0.1%, which is very low, and it will serve as I can save a lot of money if you trade. For Forex, I will also summarize the key points that I mentioned early part of this presentation. Just give me 1 minute. Forex is always a relative performance. For example, dollar yen. A lot of my clients bought this dollar yen at 82. It went up to 99.9. Target is 100, that's short-term target. But 82 to 99 is 1,700 pips. It's a lot of money if you catch this trend. And when does this trend start? It's just before the new Prime Minister Shinzo Abe took over, because he has pledged to do a quantitative easing. Effectively, is devalue Japanese yen. Why this chart move in this direction is because Japan devalued the yen, because they print a lot of yen, and US is showing recovery. So one tends to go up, one tends to go down. That's why, as a comparison, it will shoot up like mad. However, short term, based on technical analysis, it is prone to a correction to about 96, around 96. But I suspect this is just a temporary correction, and it will surge again later on. This is my personal opinion only. Likewise, Aussie yen. Aussie yen, it could be one of the main beneficiaries of the carry trade. When Japan print so much money, the yen devalue, the carry trade will go on. So effectively, for those of them who bought into Aussie against yen, they are collecting the swap points every single day. It's like collecting the interest every single day. That's why you can see dollar yen and Aussie yen show a similar chart pattern of uptrend, and then there's a breakout. Okay? These two charts are very strong at the moment. In comparison, Aussie US dollars is in the range bound. The reason is why this one is flat as compared to the other one, which is uptrend, because dollar is strengthening, and Australia against US dollars is also a positive swap point. So gaining swap point. That's why a lot of people a lot of people are willing to sell down the Aussie yen or Aussie US dollars. It's trapped between 1035 versus 106. Take note. It's trapped within the range around 1035 and 106. So this surge is quite near to the resistance. So potentially, it's touching a resistance, it may retrace. Okay? And for Euro US dollars, which a lot of people are trading on this pair, short-term resistance is around 13150. Here, we are very near to this resistance. So potentially, it may touch and then retrace before it can clear this resistance. But the next level will be about 1.33. Short-term wise, those of you who are long on these US dollars need to be more careful, because it may retrace here before it clears the resistance. Okay? So today I've covered indices, shares, and Forex chart patterns. Due to the time constraint, I won't be go into too details. However, I want to let you know that IG platform has free software to scan for stocks. So you don't really need to pay money to buy stock scanning software. IG offer a stock scanning software inside the platform itself, like auto chartist and scanning. And the commission for shares is is 0.1%. 0.1%. There's no commission for FX except the spread. More importantly, I'll be conducting a free technical analysis course and a CFD strategy course coming Tuesday and Wednesday. Those of you who are interested, you can SMS your name to this number, 83821313. Take down this number, 83821313, to my assistant, Michelle. The timing will be 7 o'clock in IG Market. 7 o'clock IG Market, Chevron House, 22nd level, 16 and 17. I will have 2 hours to share with you the technical analysis and the CFD trading strategy for free, okay? That's why I'm not here to sell anything, but just offer some help, some courses that may benefit you in the short term. Okay, take down this number. I repeat again, 83821313. 16 or 17, you can choose one day, 7 to 9 p.m., location, IG Markets. And if you want to register, you've got to do it fast because every session is limited to 30 seats only, okay? Because today's audience is quite strong. I think CS is doing a very good job. The attendance is very strong. We have only 2 slots at the moment, Tuesday and Wednesday. Try to register as soon as possible. Anyway, it's free. And those of you who prefer Chinese, I will do a Chinese one on the Thursday. It means instead of 16-17, I will have a Chinese course on the 18th of April, which I will share with you some of the technical analysis, important points, and how to use CFD to trade your shares. I think I will leave the question and answer to the panel discussion later. With that, thank you very much. Thank you. Thank you.